Okay, so we'll start off with this. This is typically what I do in the morning, pretty much every single morning. Just kind of the morning scan process. Um, I'll start off looking at the cues. Typically, I do this before the open. Um, Woke up a little late today. So, this is the main screen I start off at. I want to get a general sense of where we are in the bigger picture of things and look at the premiums and how price is responding to those using the historical volume. There's call put volume too. Um, I generally stick with the premiums because they give me a better sense of just where participants are spending, most of their money and how price is reacting to it, and I'll kind of filter through the time frames. Obviously we're making higher lows. This is a parabolic run. This is not normal. It doesn't always look like this, so keep that in mind. Coming down to the 14 day. We're just getting constant gaps up. When price is gapping up like this, you have to have a directional bias, meaning if you try shorting this, like you're trying to catch this move, you'll probably lose a ton of money. I still make this mistake a lot. But when price keeps gapping up really strong like this, it's best to just wait for pullbacks. So now we had that first gap down after the 11th and the 12th. Price immediately ran right through it. I thought this was going to be the beginning of the turn, and it would maybe range between 710 and like 695 or something like that. And um, I guess they let it, and when I say they, I mean institutions, market makers, whatever, they let it run back to the highs and above that. So we had this strong gap down, price immediately went up, and now we have another strong gap down. Um, So sellers are stepping in. I made a post yesterday kind of showing the entire target of the accumulation base was like 720 ish. So typically, when it reaches that point, you're going to start getting at least some interest in profit taking from institutions, which is what we're seeing now. I don't know if this is like the end of it and we're just going to start selling off or what it's going to do yet, but I I'm paying attention to see, like, right here, this was a good clue. I missed it. I can't always just monitor this all day and look for these, but when you're looking at this candle here, you can see most of it is red and it's coming in at a very important high. Typically, price is going to start responding to these types of signatures. That's a very large candle premium. Um, if you look in the top left corner of the red box here, you can see the puts outweigh the calls by a pretty wide margin, and it's not like it's coming in at a low. Like if I were to see this candle after like a strong pullback, I would think it's going to get squeezed. But because it's coming in at after price already ran up a lot, these tend to be more valid. Um, Something else I noticed coming down here, I also monitor the historical data for anomalies. Anomalies being like, what does the total premiums look like? Is there anything that looks out of place, like really climactic? It just doesn't look like anything else. And I noticed this here: 3 billion in total premiums on May 8th. Usually, when you start seeing numbers like this, you're probably getting to some kind of um, turnaround to some extent. I mean, you don't see anything like that going all the way back to February 20th. Like there's nothing that really approaches 3 billion. You start coming up into these areas, you get a lot of volume and prices just kind of like having a little bit harder time advancing. That's also a clue I look for. Different clues, typically when the open interest has a change, That's really significant compared to a lot of the other open interest changes. Like here you had 9% change in open interest, followed by a massive move, 13% change in open interest. This was right after options expiration. Typically, after every options expiration, which is about middle way through the month, every single month, um, you'll see this open interest change. And typically, it'll start off some sort of important move to the upside or downside, depending on context. So I'll look at that, flip over to the charts to see what the dark pool and gamma levels look like. Are there any new um, put gamma positions in play? And in terms of how I got that 720 target, basically you're just taking the high and low of the entire range of whether it's accumulation or distribution. Um, so 637, we'll take it all the way from the swing low. We'll just make it even 557. So that's 80 points added to, we'll make it roughly 640 just to make it easier, is 720. It's not perfect. It could go, a little above, maybe a little bit more, like 735, a little under, but it's somewhere around this area is typically where institutions are going to start looking for some sort of topping action, even if it's just a consolidation. Another way, this is also called order block projection, where you're taking measurements based on the swing highs and lows of accumulation or distribution. So, taking a closer look here. Oh man, this is laggy. All right, come on. Oh my god. Um, so all of a sudden, this kind of this was not here before. This put spike here. Um, there is still call gamma to the upside, but all of a sudden this put gamma down at 700 just showed up. So that is another clue. All of a sudden, there's some exposure to the downside that is exceeding any of um, these call gamma nodes up here. I'll flip into. I'll have to make multiple videos because I have to I look at all of these clues and it does take a little bit for me to do this properly. And this is a clearer picture without the dark pool. See, all of a sudden this showed up. It's down at 700. That doesn't mean it has to be super bearish because there is still, there are still bets being placed on higher, but the fact that there is something showing up significantly larger than any of these tells me that maybe there's some positioning going on to the downside all of a sudden. So I only have 15 minutes to squeeze in as much of this as possible. I like looking at the daily gamma exposure as well. You can see how this whole little, whatever you want to call it, choppy accumulation meant to look like distribution was playing out. There was a lot of negative gamma exposure, and price really wasn't falling that much. It was, but really not that significant. And you can see how strong this is relative to a lot of what was going on back here. And price really wasn't coming down. You made kind of a bullish divergence in gamma exposure here. Made a higher low in these gamma, in these put gamma nodes here, and a lower low in price, and that was a bullish divergence that ultimately led to this. Now all of a sudden we're seeing price responding to the downside from negative gamma, and you see a bearish divergence in gamma as price is moving up. So I rely a lot on divergences in data to kind of gauge price direction and sentiment. Let's see. These gamma positioning changes from day to day, depending on what's going on in the market and how dealers are positioned. So it could look like this today and it'll look completely different tomorrow. So I really just monitor it a lot. See, like this was positive all week, and now all of a sudden it's super negative going into next week. And that could also change. Today it looks like 710 could be the barrier in terms of put. There's a put gamma wall here, and 700 is the lower. So it may just range in between this area here. I like using the nope cope ratio thing to look at where previous dark pool buying occurred, because usually these large nodes act as support and resistance on the way back up. So here's one right down here at 706.18, where price is right now. So this could act as support, or if it breaks through it, I don't know, you know, you could see price go a bit lower. So I like looking at that. Um, I look at this volatility thingy. Um, this is what I posted yesterday, this historical risk reversal skew, and I noted that we're starting to get super low into this, back to where, like, I'm kind of looking at this area here, how it responded. Um, Analogs can get you in a lot of trouble, but this, just how it's looking here, this looks like a larger version of this, how like you get this huge parabolic spike, the risk reversal skew down here gets really low, like down to the prior low, and this kind of marked the top. And it's kind of doing something similar over here. Doesn't have to happen, but I would not be surprised if, you know, we see some kind of chop and then it pulls back and you don't really see it bottom until it comes back to test somewhere up here, the risk reversal skew. That's just my first thought here. You know, there is definitely the risk of that. Yes, it could go higher. I don't know. These are just little clues that I look for to gauge direction. And see, already price is kind of reversing a little here, live, real time, off of what I just mentioned here, off this dark pool thing. It got right down to this large node here at 706.18, and it's already reacting to it. So it's not just for, like, the triple Qs have so much volume and data that I can, you know, it's more effective here, but I mean, it works on other names as well. These are just areas where, you know, institutions were interested basically and bought a lot. So typically when it revisits these areas, um, it can act as an area of support unless it breaks through, and then you got a node going all the way down into here around, you know, 700-ish, something like that. I'm not going to have enough time in this video to get to my scanner, so I'll just use up the rest of the time to just kind of take a look at this and mention one more thing I look at. I also like using this net premium thing. This shows me areas where there's really good buying opportunities, and I use hidden divergences to calculate, you know, where price could find a bottom, and also where it could be topping out. Like you see here in the green net premium, since, what is this, May 5th, you're having lower highs in the call premium as price is moving higher, and then all of a sudden we get this pullback. And on the way up, every time you're getting these deep readings in put premiums that are making a lower low while price is making a higher low, these act as really good buy points. And you see every time the net premium makes a lower low here at a huge cluster, you get a pop higher. This was preemptive. It made a lower low, the net premium down here, before it sold off, and then put in a bullish divergence and moved higher. So I gotta cut this off now. I'll move to the next one.